Hey guys, Kill Stokes here. Welcome back to another video. Hope you guys enjoyed your holiday. I know it's been a while. It seemed like forever since I've been here on YouTube with you guys. But as you know, at the end of each year, I take some time to myself to kind of unwind, focus on my personal trading, not just the clients that I work with, as well as take some time to spend with family. But don't worry, I am back with your weekend video. We're going to come to you each and every week, probably for about 50 weeks straight, before I take another 2 weeks off in hibernation. But this year I'm going to do something a little bit different if you guys are new. It's something I did in the past, and then we kind of got into just kind of going straight to the charts and the boring stuff, at least in my opinion, the boring stuff. I want to make this video more like a diary, a journal of the year that is, and that's why I titled this Trading 2021 Week 1, and keep you guys up to date, not just on how I'm doing in my personal trading, but some of the most important lessons that we're discussing either on the platform with the Tier 1 trading members, or maybe on social media with some of the people that DM me, or in the podcast, whatever it may be. Some of the most informative messages I think are going to help push you along the path of becoming a consistently profitable trader. Because again, the goal here isn't just to provide you signals. I am going to show you what I think are some of my best trading opportunities, or some of the most educational trading opportunities on my radar for the week to come. But I don't think that's going to really do much for you as a trader and helping you improve, right? Signals aren't going to really do something. So if you're just interested in that, I'd recommend going to another channel. I want to give you the stuff that I think is going to help long term. And if you want to be with me for that journey, I really appreciate it. So started off this week pretty good, actually. 4 out of 5 winners in the market. And the one loser on the euro dollar, if you follow me on social media, was just by a little bit this much. In fact, my technical stop loss didn't even get hit. I kind of got slipped with the spread and whatnot, and then the price came back to hit what would be target. So it was a little bit of a stinker, but I'll take it. And what I was excited about was this. It's not necessarily the winning streak. Obviously, I'll take wins over losses any day of the week as long as they're good trades. But the fact that I was able to get back into the market so quickly. You see, when you're in a trading routine, I always preach the importance of having a routine, waking up the same time, looking at your charts in the same way, in the same order, looking for the same thing, right? Consistent analysis plus consistent execution equal consistent results. Now, I think that's key to becoming comfortable in the market and making sure you catch all of the opportunities that you're supposed to catch. Well, being away from the markets for 2 weeks, I was a little bit scared that I may be a little bit rusty, right? And no difference than riding a bike. You never really forget how to ride a bike, but when you haven't done it in a while and you get back on, you're a little bit wobbly. It takes you a little bit of time to catch your bearings. So I was excited about the fact that I was able to get back in the market so quickly and really not lose a step as far as my RAS, my reticular activating system, my ability to identify good trades. And obviously for you guys that are on the Tier 1 platform, I had your help as well, an extra 50 eyes for you guys that are in the live room and ones that I talk to on a regular basis, 50 eyes on the market, making sure that I don't miss anything. That helps as well. But that was the biggest, I guess, fear that I had going into things. And fear was kind of the concept of this week. And I want to share with you one of the infographics that I posted today, or not this week on social media. And it read, "Cowards never start, the weak never finish, and winners never quit." And this is big to me, because the fact that cowards never start is so true. And we all have those friends that talk a big game, but they never take action to actually do it. What was the next one? The weak never finished, right? Those are people that make excuses. Oh, I can't do this because of this. Oh, I can't do that because of that. I just had a conversation earlier today about a person who just had more excuses than solutions, and we're just waiting for them to kind of quit and call it in. Not a trader, but in some of the other stuff that I do outside of trading. And then it says the weak never finish. I think that's it, at least. Yeah. Or winners never quit. And one of the first things that I put in my trading plan when I wrote it is that I believe that the only reason people fail is because they quit before they give themselves the opportunity to win. Meaning that they stop trying, they give up. And I'm a firm believer that if you approach something the right way for the right amount of time and you put forth the right amount of effort, there's no way you can't be successful. And this subject kind of stemmed over into some of the podcasts that I did this week and last week, where I just put out one today on Friday talking about a trader or interviewing a trader who was kicking the can. And this was a trader who was basically doing everything they need to do to be successful, but they never made that last step of going live. And that's big. Typically with newer traders, we have to worry about them rushing into the markets, right? We have to worry about them trading too soon, before they learn, before they develop a strategy, before they test, kind of just getting in with that gambler's mentality. But let's not forget, on the other side of the spectrum are those who are really afraid, either perfectionists or afraid of failure. And you're gonna fail, struggle at some point unless you never start. And that's one of the main reasons people never start. They never start because if they never start, there's no accountability to be successful. If there's no accountability to be successful, they can't technically fail. And it's important that eventually we take that step. The most important thing in the market that's going to make you better is experience in the market. And you're never going to be 100% ready to jump. You're never going to know everything. Most of what you learn is going to be once you jump into the water, and you got to either, swim or drown. So for you guys that are out there that are perfectionists, that want every single I dotted, every single T crossed, you want to feel like you know every single thing about the market, I'm sorry, but you're not. But you need to get started, because that's the only way you'll eventually get to that level. So that's on one side of the spectrum. The other side is going in too early. And another podcast that I shared this week talked about my personal experience. I spent some time doing strategy development and some initial back testing on something I'm working on over the winter, something that I hope to implement in my trading by June, maybe. But I caught myself rushing, right? Knowing that I only had about 2 weeks to kind of get it done before I get back into teaching and coaching mode. I felt myself going through the process too quickly, to the point where I wasn't going to trade it live, but I was starting to get tempted. And you want to be careful about that as well. There is no rush to be in the market. If you're in a rush to trade live, you're simply in a rush to lose money. Right? So you got to find that balance between being patient enough to learn the right way, but also being willing to take that leap and actually get started when it's time to get started. So that was kind of the lesson of the week, if you may. Now, let's hop into the charts. I have a few opportunities I want to talk about. As always, I'm going to run the disclaimer and that stuff through first, and I'll see you guys at the very end. All right, so let's hit the chart. We're going to talk about two continuation setups on the radar today. One is one that is kind of already met the qualifications for looking for a continuation trade. And what I mean for a continuation trade, I mean a trade in the direction of current price movement. We won't get into the whole trend continuation versus counter trend, because again, as I gain more experience in the market, I try to get away from those words, because we all know that there's no such thing as the real trend. There's only our interpretation of the trend, and that changes based on what time frame and what time duration we're looking at. So let's just call it a continuation, continuing in the current direction of the move. So one is already met the qualifications. One, we need to wait for a very specific signal, but there's a clue that it may happen. So let's go over to, what am I looking at now? Euro Canada here. I'm going to erase some of these lines and whatnot. Euro Canada, and we're going to start here on the daily chart. Let's just minimize some of this. I can even get rid of all this stuff right here and just have a completely naked chart for you. So we just ended the day and ended the week with a very strong bearish candle. That's going to be that last candle you see on your chart. And the reason that we qualify it as a very bearish strong candle is because of the range of the candle. It has a wide range. It is a rather large candle. We can also look at the story in which the candle left us. Essentially, where did we open, where did we close, and what happened in between. And you can see that the close is very close to the extreme lows of the candle, which means we were able to close the session, close the day, close the week at essentially the lowest point that we pushed down. So given this information, the next question I want to ask myself, and this is the whole IPDE process, is where are we likely to continue next? And the line that stands out, or level that stands out to me, is going to be right down here at these previous lows around the 154.30s area. And if we drop down to a 4-hour chart, we can start diving in and getting a clearer view, more of a micro view, a shorter term view of what's to come. So continuing up on the great daily close, we also had a great close on the 4-hour, right? During the day, you can see that we pushed down. If I get my little arrow things ready, we pushed down, we retrace, and then we end it with a lower low, lower close below the previous structure lows. That lower low, lower close allows us to make the prediction that price is likely to go lower, which also confirms or is in line with what we saw on the daily. So the question after that is, if price is likely to go lower, where are we likely to go lower to? And there's a few things I can do here. I can take a 1-to-1 measured move. So if the market is moving harmonically and in equal swings, you can say, then a good place to project the target is going to be right down here at this equal measured move. I can also bring in a Fibonacci extension tool and drag that from our previous swing, so the A to B of that move that I just drew out for you, and back up. And you can see that we're going to get a 1618 Fibonacci extension down at the bottom. Now, these things aren't always going to line up. I'm not I use fibs, I use AB equal CDs, I use the RSI and whatnot. I may be using volume in the future. It's important to understand that all of that is complementary. I think I got that word right. It's a big one for me. For someone with 2 degrees, you'd think I'd learn how to say fancy words like that, but no. Those 2 expensive pieces of paper did nothing for my vocabulary. Excuse me, but we're not looking for, they only complement price action. So my opinion, and there's going to be different opinions across trading, is my opinion that price is first. Price is the best indicator that we have. It's really the only indicator that we have. And everything else, all the other tools, techniques, tactics, indicators are used to complement price. So they're add-ons. Imagine price being like the delicious piece of steak. It's dinner time on a Friday night, so I'm extremely hungry right now. And your indicators being maybe the toppings and the garnishes and the sides and all the fun stuff you put on it. So when we draw these things out, right, we have stuff like this where we have a 1618 down here, we have an AB equals CD up here. They don't have to line up perfectly, right? What I'm looking to do is I'm looking to generate a zone. I'm looking to generate an idea of what zone is price likely to complete in, right, terminate in from this extension. And then I'm always defaulting back to structure to kind of pinpoint that area. And for me, I look at this structure low right here, and that makes for a good area. So look for a potential move lower here on the Euro Canada. Plenty of ways to take advantage of this, but lots of potential movement from 154.97. Didn't even notice that we just took out an even handle number as well. Even handle psychological number. Those are numbers that end in 0. So 155 even is typically a psychological number in the market. You can see held over here as well. So lots of room from basically 155 evens down to about 154 30s. This should be a good opportunity both for swing traders on the higher time frames as well as intraday traders, right? Day traders on the lower time frames looking for those directional moves. So next we're going to take a look at the Aussie-Yen, and this setup actually reminds me, or like I guess the lesson that we're going to talk about reminds me of a lesson that we talked about in our live trading room during the week. And one of the coolest things about the live trading room, and I'm not saying this to plug you guys on YouTube, although you can join. It is part of your $1 14-day trial membership. But for more so, the traders on the platform, the most important part of the live room is that it gives you the ability to practically apply what you're learning in the courses to the live markets. And I can't tell you how many traders I've spoken to who, not that they don't get confused from how we teach it in the courses, but it's an adjustment, right? We talked about an adjustment of getting used to riding a bike again, right? It is adjustment from going from training wheels to a live environment, so non-training wheels. And one of the best adjustments, or one of the best ways to help with this learning curve, is to come into the live room where we're literally doing what I'm doing right here every single day for 2 to 3 hours a day, both in the London session and the New York session. So it's reps of reading a price chart, identifying structure, looking for opportunities, entry stops and targets, and answering any other questions that you may have. And trust me, if you ask any of the high performing traders on our platform, they're going to tell you that they spend a massive amount of time in the live room, either watching it live or going back and watching the recording. Trust me, it's that repetition will do wonders for you. But This particular example reminds me of, I think it was a Thursday live room, a discussion we had on IPDE process. And for you guys on the platform, if you get a chance, sorry I didn't put a minute tab next to it, but right after the New Zealand Canada discussion, we had a great discussion on IPDE and how that's going to help us determine what side of the market we want to be on. And if we just look at price action right here from this type of perspective, it looks like we're in a full-blown bullish trend, right? We've just taken out previous structure highs, right? We're floating in the middle of space in no man's land, and you're automatically shouting bullish, 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 right? But what's important is that we gain perspective, right? We look at this, and a simple way to do that is just draw a horizontal line, right? Draw a horizontal line on here and just look back and ask yourself, where are we trading at? Well, we look back, we've taken out all types of recent structure, but we do have this previous level of structure right here, and this other purple line is going to be our next level of structure. That's going to be important. And you can see, I'm just going to change this one to red so we don't get confused here. Bang, there we go. And we're going to see that if we look at that red line, we actually, although we've traded up to it, I guess did we break and close above it? Hold on. I thought we didn't. That's going to change things dramatically. Because that's the whole part of the IPDE process. Let's get right on here. Actually, we may have broken and closed. Okay, this is going to change things, and I'll tell you why in a little bit. Yeah, we did. Okay, so we have this 4-step process called IPDE: identify, predict, decide, execute, where we identify what the market is doing or what the market has done, and that allows us to make a prediction on about what's going to happen next. So it all starts with that identification. So what I thought at first glance, and what we're looking at on this pair or a similar pair on Thursday's session, was that we were trading at structure, but we did not break structure or violate structure. And because we didn't violate structure, we can't make that prediction that price is going to go likely to go higher. And because we can't make that prediction, there's no reason to look for trading opportunities in that direction. We should only be looking in the opposite direction or waiting for that violation to happen. It looks like we do have a violation by just the smallest of margins. You're going to want to, I don't personally trade this pair, but what you want to do is you want to go in and actually look at the highs and the close to make sure you do have a violation. I suppose I should do that. Let's just not be lazy here. Akil, the high is, remember this number, guys, or the close, excuse me, 80.73. Let's just go back. I'm being lazy. That's all I'm doing. 80.73, 80.73. The high here is 80.71. So we did indeed get a break and close above structure. So we can say that we violated structure, break and close above, right? That allows us to make the prediction that price is likely to go higher. If price is likely to go higher, where are we likely to go higher to? Well, it's that next level of structure that I drew out for you right up here. So we can now set ourselves up for looking for buying opportunities, very similar to what we looked at with the previous pair where we had violated structure. Now we were looking to sell. So let's take a look at this on the 4-hour, and here's going to be an even better sign, right? So you can see that we broke and closed above structure, and we basically consolidated for a few days. We haven't really gotten a big follow through. And then finally today, for the last 4 hours of today's session, the sellers made a big push on the way down, right? Sellers made a big push on the way down. They actually did that. There was, I guess, a even battle in the three candles before it, but the sellers made a big push on the way down. But you can see last minute, the buyers were able to push it up. This is a very strong buying signal, right? This is a pullback first and foremost, right? The previous structure, if we're working on identifying structure, this is a pullback, looks like to a 618 Fibonacci retracement. Yep, right on a 618 to a previous structure, and you're getting a very nice, strong bullish channel. So if you're an aggressive trader, obviously you want to wait to see what the open looks like. But if we trade above the highs of this green candle, that's going to be a very aggressive way to get involved in a trade higher. Again, you can set yourself up with a very good risk reward. This is aggressive, but I'll show you what it looks like. Zoop, and we'll probably go and pinpoint that a little bit. Go back down to 82 even, the even handle number. Get below that low. You're looking at almost a 2-to-1 risk reward there. Or if you're more conservative, right, wait for a violation of these highs, wait for a break and close above these highs right here, and then look to trade it up or look for your next pullback. And again, as you go down to lower time frames, there's probably all types of different ways we can get involved as well, but we're going to stick to the higher ones here on this weekend video. That way it gives you some time to kind of really think about things. So good potential buying opportunity. Again, I went into this earlier, just I kind of did a brief run around the market and saw this as an opportunity that looked good. And I was going to say we need to take up those highs first because we didn't have the break and close above. But lo and behold, when you actually pay attention to detail and put your notes on the right way, you see things that you didn't see before. And we did have a break and close above that level of structure, meaning we are a go for looking for buying opportunities. And I just laid out a few ways that you can get involved for the week ahead. All right, so I hope you guys enjoyed this week's video. If you did, make sure you hit that like button. Make sure you subscribe if you're new. That way you don't miss this weekly video. Also, leave me a comment if there's anything you want to talk about. If there's any questions about anything in the video, leave it below. I do read each and every one. Many of them go on to become podcast episodes. We may discuss it in the next video. Who knows? But if you have a question, don't be shy. Trust me, this isn't one of those platforms where, at least the community that we have, where we're not going to laugh at you and be like, oh my gosh, how can you ask that? Everyone knows that, right? Those people tend not to hang around the channel much. They tend to go towards the get-rich-quick Lambo people, right? So ask a question. I will answer it. I'm pretty sure someone else in our network will answer it as well. And put yourself in a position where you can learn and continue to progress week after week. And I hope this video becomes a staple in that for you, something that you tune into each and every week that's helpful.